Hi guys, wish you a very good evening. Let's start analyzing Bank Nifty today. Today is the 26th of April 2022 and Bank Nifty and Nifty went entirely sideways today. Actually, Bank Nifty and Nifty both had uh, an average kind of a CPR. It was not very wide, although in Bank Nifty it was wider than it was in Nifty. Let's check the Nifty CPR today. You could see that Nifty had a very narrow CPR. Bank Nifty did not have that narrow a CPR, but it still did not have a very wide CPR, and so it did not suggest a sideways day. But anyway, let's start analyzing with the first candlestick. So it was a gap up opening today, and let's check the gap now. This is the previous day high, right? So starting from the previous day high, if we calculate the open, we can see that it gapped up nearly 260 points in Bank Nifty, and if you want to see from the previous close, the gap up was around 340 points, nearly 340 points. So that was a fairly healthy gap up today, and you could see that the first candle itself was a red candle with a strong wick on the bottom, and it also had a wick on the top, and it was taking resistance right at the weekly pivot. You can see the yellow line here, it's the weekly pivot here. So that was where it was taking resistance, exactly at the weekly pivot. That is where it made the wick. Now the second candle actually went through the weekly pivot. You can see that it's a strong green candle and it went through the weekly pivot, and immediately the third candle reversed right back below it. So the R1 pivot was right here and the weekly pivot was on top, and mostly all the trading happened between those two levels today. And then we had already marked the 36,580 level prior. It was supposed to be a strong resistance. You can see here that it was a strong supply zone from the 22nd of April, so it was going to act as a strong resistance. And although price has not fallen too much today after hitting that level, it has not really acted as a very strong supply zone. So it remains to be seen what happens tomorrow if price meets that level again. You can see that this particular candle here, which was the 11:55 a.m. candle, happened to break out of that supply zone, and you could see that it was a false breakout. Now here you could see that the price was going sideways for the entire time before it gave that breakout. So when the 11:55 a.m. candle broke out, it was a fairly okay breakout candle, but it was not a very strong bodied candle. So what are breakout candles like? I prefer breakout candles to be like this, something like a strong Marubozu candle, which shows that it has a strong body. But you can see here that this is a pin bar kind of a candle. It's not a very strong breakout candle, although the wick on the bottom is a buyer's wick. So this wick here on the bottom, it doesn't really suggest that there is anything weak about the candle, but still it is not a Marubozu candle. But then anyway, the very next candle broke right back into the zone there, that is below that 36,580 level. So such breakouts are false breakouts. So you can see that this is a false breakout here, and after that price actually tended to come down from there. It crashed below the low that the day had made. That was the low of the first candle, and it was this particular candle here that broke through the low of that day. Then it again took support and it again bounced from there. You can see how it took support and bounced. And then anyway, there was some volatility here towards the end of the day, which was pretty much expected, and price anyway stayed very much in the same range today. Let's see where it opened today. It opened at around 36,530, and let's see where it closed. It closed at around 36,390. So not a very big difference between the days open and close in Bank Nifty today. And you could see that the R1 pivot was acting as a support initially, although the price opened above the R1 pivot, did not touch the R1 pivot really. And this particular breakout here out of the R1 pivot, or the breakdown, was not successful. Buyers pushed the price up again towards the weekly pivot, and you can see that the weekly pivot today was a busy area. You can see how the price has been trading around the weekly pivot for the most part of the day. Here again it took resistance and then it fell. But even after the breakout here, it was not a good idea to go long there, because you had the Virgin CPR immediately on the top, and Nifty also had resistance on the top. So it was not a good idea to go long there. And anyway, if this had been a green candle, this opening candle, had it been a green candle, then it would have been worthwhile to see what happens here when the price retraces back to the day's low. Sometimes it can happen that with the R1 pivot so close there, it can happen that the price can hit that level, the low, it can break it partially, but then the R1 pivot again acts as a support, and the price can come here and then it can bounce off again from the day's low. But since it was a red candle, the opening candle here, it did not really give that kind of a price action. And so looking at Bank Nifty, today's movement of Bank Nifty, let's just adjust the levels for the upcoming trading session. We will extend the CPR, the Virgin CPR from the 22nd of April, and we will also just adjust this supply zone now upwards. Well, it still is active, so what you could do is you could mark a zone around this area like this, where you can see the PDH here. You can mark a zone around that area, and you can be watchful for the levels whenever the price comes to that level again tomorrow. Let's check on the 15-minute time frame, and you could mark a zone here again. Now what you could do is you could delete this level, and instead of this level you could just stretch this level down to the PDL, and you could mark a zone like this. See, you could get a touch of these candles and mark a zone where this 3 o'clock big green candle has been formed. So you could do that and mark a zone there which marks as a which is marked as a support, because you can see that price could not break that level of 36,266 nearly. Let's just mark this a little bit higher to the high of that candle. Yeah, so the level basically was 36,270, and that level could not be breached on the 25th, and on 26th the price has taken support at exactly the same level. And so what we will do is we'll keep that level ready as a support. Okay, so we will go to Nifty now and study what important levels are there in Nifty. Okay, now this is Nifty's price action for you, and you can see that the first candle was a doji green candle. You can see this is the R2 pivot here, and the doji has been formed exactly at the R2 pivot. It did not convincingly break the R2 pivot, but the doji actually opened below the R2 and closed above it, and it also had the weekly CPR at the same level. If you can see this, you might not be able to see this, but this right here is the weekly CPR, the one that I'm marking in a different color here. Yeah, so that is the weekly CPR, and you could see how price was trading initially within that zone itself. So now you can see that price was taking support exactly at the bottom CPR, weekly CPR, and at the Virgin CPR from the 21st of April 2022, and then price filled, it actually hit the upper border of the gap, and then it broke it. Then it also broke the CPR at this level and it went up, but then it had the Virgin CPR coming from the 25th of April along with the R3 pivot at the same level. So it was a confluence of resistances on the top, so there was no real point going long on the first candle itself here, although the first candle looks to have broken the R2 pivot. So chances are strong that when you see these back-to-back green candles, that the price might rally from there, but the chances are very high that the price might just hit a resistance at some point and reverse, and with all the stop losses here being hit, the price can take out the low of the day, and then it can have a massive fall to the downside. In fact, I had tweeted about this in the early stage of the day itself, after the day opened, that you should not run behind these green candles because the price might take resistance and it might reverse, and once it reverses you will be able to see a huge fall, which we had seen. Actually, the price had reversed at 12:45 p.m. with this big red candle, and then another strong red candle, but then there was Virgin CPR support below it again, and you can see that the Virgin CPR has provided support to price once again. It had provided support to price in the early part of the day, and there was the weekly CPR there also, but here the price had broken the weekly CPR and there was no real strong support at that level. Still price reversed from that area, and my idea was that the price might at least come to the previous day high and close the gap there, but it did not close the gap and it has left a very small gap here. Okay, so a very negligible gap has been left now to be filled, and price traded in a sideways zone in Nifty throughout the day. So whenever such green candles happen, you should read price action. You could see the strong wicks on the top side. Whenever there are strong wicks on the top side, you can see that there is not much buying strength here. So although these were all red candles making higher lows, you could see that they were all going up with large wicks on the top. And if you see, this is the high of this candle, then this is the high, this is the high, this is the high. So really, apart from the second candle that broke the first candle wicks high, no other candle has been able to break no other candle body has been able to break the previous candle's high. So the high of the wick is not being broken by any closing of any candle after the second candle. And so you can see how price actually took resistance. As I had tweeted, it took resistance at this level and it fell. Now you can see here that there seems to be a sort of a double top pattern here. You might ask me if this was a tradable pattern. It was not a tradable pattern for me, particularly because I usually take double top patterns only at strong resistances. Whenever I see that CPR is there on the top, or I see that there is a strong or a wide Virgin CPR coming from either the previous day or a day prior to it only. So there should be a fresh Virgin CPR. So had this pattern like this been formed at the Virgin CPR at this level here, with the confluence of the R3 resistance at that level, I would have definitely thought of taking a short position at this particular price point. But since there was no real resistance on top apart from the swing high resistance is not enough for me to open a short position on a double top pattern in intraday. And so that's why I had not taken that position. Second reason why that was not a very good position to take was that the previous swing low was at this level. You could see that this was the first candle low here, this was the first candle low, and this was the previous swing low. And so had a short position been opened after this particular red candle was formed, then the entry would have been somewhere around this point and the SL would ideally have been better here at this point, okay, because it was to be on the top of the R3 pivot ideally. And then where would you take your profit here? So that was not a very good risk reward, right? In fact, it was a very bad risk reward. So the risk is bigger than the reward here. Now, why would you book your profit at the R3 or rather the R2 pivot? It is because the previous swing you can see has come from the R2 pivot, and so if the R2 pivot provides strong foundation, the price can bounce from there again. And that is the reason why I did not want to trade at that reason. One, the R3 pivot and the Virgin CPR here were very far away from the previous swing high, the swing high of today. And secondly, the risk reward was really bad because of that. And so again, no real possible trade there. You could see that one possible trade was here at 12:45 p.m. where the first candle's low was taken out. So a strong support might have been there, right? Why would it have been a strong support? Think about it logically. Whenever someone sees a gap up open green candle, so what was the gap up like? Let's measure from the previous day's close. From the previous day's close to today's close, you can see that it is almost 0.9%, and in terms of points it is around 154 points, so more than 150 point gap up today. And whenever whenever retail traders see this sort of a gap up open and the close above R2 pivot, is it not a very strong sign to go long, thinking that the previous day has been a sideways day So today, especially with the narrow CPR, it could be a trending day. So was it not a very logical thing to think that a lot of retail traders would jump into the first green candle? And so had this green candle's low been taken out, the moment this low is taken out, people would be running to cover their long positions, to close their long positions. And that is what exactly happened in these big red candles. But then again, you could see that the virgin CPR was there present at that level, and you can see how beautifully virgin CPR has provided support to price. So again, this particular red candle, sorry, which broke the first candle's low, was not a very highly tradable candle, or not a very high probability tradable candle. Okay, so based on this price action analysis, let's see what levels we have for tomorrow. Now we will delete this box which denotes the gap, and we will adjust this level up top here to show that we have a zone there which might act as a demand zone, since price has bounced from that level. And we will keep the level ready here also. We'll keep a zone ready, which is a gap anyway, but this level might not really be a very important level going forward, the level of 17,064. The reason being that you can see that that level was tested once at this point. See here, let me just adjust that level up a little bit, 17,064. So it's around this area. So you can see that the level was active here. It was touched once, then it was touched again twice. Both times price had bounced. Here also price had bounced from that level, and you can see that the price, after it came to it today, it again at 17,064, it again took a bounce. So the level that we have marked is around this area, and it has again seen a bounce from there. So the more touches that a level has, its importance, in my opinion, goes on diminishing, because the multiple retests of that level tend to make that level weaker and weaker and not stronger and stronger. Okay, so keep that in mind. We are marking that level, but just keep that in mind that level, the next time price comes to it, might not hold. And then the virgin CPR also should be deleted, both the virgin CPRs now, because we have candle bodies inside them. Let's go to the 15-minute time frame. Let's follow a 15-minute time frame analysis here. So yes, these are the levels that we have. We don't have a very strong supply zone at this point. From today's price action, we don't see a very strong fall anyway, and the level here could be adjusted up here also, but I'm not doing that simply because as I just said, the level has been retested many times and it might not be really important in the upcoming sessions. We will just extend the virgin CPR coming from the 22nd of April. Now we have a virgin CPR here as well, but it's a very narrow virgin CPR, so it's okay if you don't mark that virgin CPR. Better to keep the chart as clean as possible with at the least amount of levels marked on the chart. And since we see that this particular level, once price has reached, let's just mark that level and I'll tell you which level it is. Yeah, the level is around 16,888. So since that level has been reached, you can see that price has bounced from there, right? So once that level reached, touched here at this point, the candlesticks have touched that level. After that, the price has bounced. And what is the bounce like from yesterday to today? Let's see. From here to the high, the bounce is around 336 points. Okay, so that level is also important, so you better mark the previous day to previous day low. That is the 25th April low, which is also an important support or a demand zone for us, because you can see that price has bounced towards the end of the day from here with strong green candles here, right? And after that, you can see that there is a huge gap up opening today, and that gap has sustained more or less. So the price has not been able to close into the 25th April's range. So that range has not been broken today on 26th April, and so that level will persist as a strong demand zone going in the future. Okay, so we have a gap on the top here which we will extend. We have a version CPR coming from the 19th of April, although it's a very old version CPR now, but we will still keep it marked. You can keep it ready for the next 2 weeks after it has formed. Okay guys, so I think that should be all as far as the price action analysis and the important levels of price go. And I will update these levels on Twitter, so please take down these levels from there. And please definitely go ahead and share my videos with more and more of your friends and colleagues and your family, so whoever is an aspiring trader will be helped by these analysis videos and other educational videos on my channel. If you've liked the video, please hit the like button, subscribe to the channel and hit the bell icon so you're notified each time I post a new video. Thanks guys for your patience and thank you for watching this video. I'll catch you in the next one. Bye bye.